Okay, so this is going to be kind of a recap of what happened last week. And then we're going to go ahead and go over what the expectations are for this week. The past week was not a lot of earnings this week. We had the uh, a light case of earnings, mainly on the as we got to the close to the end of the week. I think on Thursday and Friday, Delta reported. And I haven't checked it to see how it was doing. I do have a couple positions in there, but those are actually I take that back. It did push up. I just don't know the numbers on that, so I'll have to go back and look at that. But mostly, we didn't have a lot of red folder. We did have unemployment. Unemployment last week was the main one of the main things, and we had FOMC meetings, but not a lot came out of there. We had OPEC and we had a Waller, FOMC member Waller. He spoke on the 10th, and that was the same day that unemployment was released. So not a lot. But this week we do have CPI. We have Empire State Manufacturing Index. We have that on all that on Tuesday. Then on Wednesday we have core PPI. Um, so those are going to be our two main days that we look at. Then on Thursday we have core retail sales, unemployment claims, Philly Fed manufacturing index, and then Waller speaks again. That's going to be on Thursday, July 17th. And then on Friday, the 18th, we have consumer sentiment and inflation expectations. So starting with core CPI on July 15th on Tuesday. The previous was 0.1%. Forecast is 0.3%. That's on core CPI. On CPI, it's the same. And then on CPI, uh, core month to month and CPI month to month, both are 0.1% on the previous month, and the forecast is 0.3%. On CPI year over year, we came in on the previous year at 2.4%, and right now the forecast is 2.6%. So I'll repeat that again. Core CPI month to month and core CPI month to month and CPI are both point zero point. Gosh, I'm getting tongue tied. So let me try this again. So July 15th, Tuesday, we have CPI. Core CPI month over month and CPI are both 0.1% on the previous month. The forecast is 0.3%. CPI year over year, previous year was 2.4%. The forecast is 2.6%. We also have Empire State Manufacturing Index. The previous month came in at negative 16. The forecast is expected to be negative 7.8. On Wednesday, July the 16th, we have core PPI and PPI month over month. The core PPI month over month, the previous month was 0.1%. The expectations for forecast will be 0.2%. PPI month over month came in at 0.1%. The forecast is 0.3%. And that's on Wednesday 16th. And then now Thursday the 17th, we have core retail sales. The previous month was negative 0.3%, and then the forecast is 0.3%. So that's on core retail sales. On retail sales month over month, we came in last month at negative 0.9%, and the Forecast is to come in at 0.2%. Philly Fed manufacturing index came in at -4. The forecast is to come in a positive zero point 0.4. And then we have FOMC member Waller speaking later on around 6:30 p.m. Then on Friday, we have consumer sentiment. Last month it came in at 60.7. The forecast is 61.4. And then we also have inflation expectations. The previous month was 5%, and there was no forecast. So that's all for the week. Going into I don't think I'm sharing that screen, but let me switch over. That's all going into the week of July 13th to the 20th. We also had tariffs running the show. We had last week, tariffs ran the show for breaking news for the most part. Trump put a 35% tariff on Canada, which starts August 1st, and threatening 50% tariffs on Brazil. Don't I don't know at the moment what the timeline of that'll be. I'm sure that Canada will likely be retaliating it in some shape, form, or fashion. There were also there was also news outside of that regarding the Epstein files. They've and I'm doing this in air quotes. They've determined that there's no list of people. Don't know what the circumstances around that are. I won't dig into details, but that was one of the major focuses. And then finally, there's been swirling news around Fed Chair Jerome Powell likely potentially resigning. I haven't seen or heard anything from out of his mouth or any uh, tweets or anything from any official accounts of whether or not this is true. His term's actually scheduled to end next year, early spring. I think it's April or May and maybe even June. Not sure. But I am sure that whoever Trump nominates, they will immediately uh, attempt to lower the interest rates, probably by multiple points. I don't know who the candidate is, but right now, Fed Chair Powell is still saying that he and the rest of the FOMC members will likely do rate cuts. I'm thinking just based off of the timing, we'll get a late third quarter, early fourth quarter rate cut so that we can, you know, that'll be in line with to entice more spending around the holiday time. So that's kind of where I'm thinking that'll be. Let's take a look at the COT report. The COT report showing on NASDAQ. So the 24th first, and then going into this week. So from last week to this week, there's been more sell side offered for the institutions. More sell side offering, likely some partials being taken near these highs, near the highs on NQ. So that's probably what that is as we start seeing that as we start to make new highs, you see that institutions are starting to sell. And usually you're going to see that the commercial larger hedge funds, they're going to be the ones that are adding on at these highs to keep the market pushing higher. That's on NASDAQ. On NQ, that was on NQ, NASDAQ. On YM, Dow Jones, you can see kind of like the same thing going on. They've been flat mostly on Dow Jones ever since the 24th. So the 24th until now, you see negative. We went from negative 6,064 to negative 7,501. And pretty much added on about another almost about 1,000 or so to the downside. So again, more likely profit taking up here near these highs. Let me find S&P. Yes. S&P. Um, we did we made the most transactions in S&P. We're positive. On the 24th of June, we were positive 78K. We dropped down to 3,000K. So they took a lot of money out of this high. And then from 78K, we dropped all the way down to 3,044 on the first. And then we added back 62,000 pretty much on the upside. So this is a little 50-50 on this. More so seemed like they took some profit and now maybe like accumulating more positions. I'm not sure how to interpret it with this high still kind of hanging around up here. Um, and we've pretty much been sideways. So that kind of shows like, hey, we're pretty much sideways and moving, we were we took these lows up to where our high is now. And then once we got here, we did take some profit likely around this high over here, near 60, let's see, hang on. High near 61, 62.15. And then from that high, we've gone pretty much sideways. And our next high was 62.90. And from 62.90, we've just kind of been ranging ever since then. So that kind of like seems as though they're accumulating positions. And to take us to our next move, we'll go over the charts later to see where I think we may likely go. Um, but that's what the institutions are looking like right now. Um, let's go ahead and go to dollar and gold. We'll start there. Dollar and gold. So dollar and gold. Open up the gold on the daily. So open up gold to the downside, held a monthly pretty much, set a low inside of this previous down close up close candle, and pretty much where we had this gap right here. We were moving at the end of the ever since Wednesday, we were moving in the same direction as dollar when we on gold. So that kind of like leaded me away from trading gold a lot this week because I don't like to trade gold when it's going in the same direction as dollar because I don't really I like to trade inverse correlation with dollar and gold. So I left gold alone for the most part this week. But we are pushing into back into a new week opening gap, a new day opening gap. And this gap was so huge. So I think we may use this range again. It's looking like that may be a possibility. And that range, let me get a clear picture of it. Let me extend it out to, let's go to the weekly. Go ahead and extend it out on the weekly so we can see everything we need to see and why I'm saying that. So, uh, a lot of times when we gap or when we have fair value gaps or we have daily gaps or weekly gaps, we'll actually come back into those and reuse those sometimes. So I think that's what's being done here. We gapped up, came back, traded through it, and then we used it to push us down further. And now we came back and tried to reject it. We've held this small gap right here, pushed up back into this gap. So this may be a new area of support, and that may be an area that we might want to kind of keep an eye on. This gap right here, Monday to Tuesday. This is where I'm thinking we're going to come back into for sure. This gap. So we're playing off a lot of gaps right now. Let me get the exact that's open 844, 844. So the gap we're going to be playing off of is a gap from June 11th. That's a Wednesday, June 11th. The open of that was that's the low. The low was created on Tuesday, June the 11th, and the high was created on June 12th, Thursday, June 12th. The low on that gap is 3344.7. The midpoint of the gap is 3360.4. And the high of the gap is 3370.0 is the one where I'm thinking we were gonna play off of. And what I'm thinking is we come back and find support at one of those levels. I'm hoping to find support roughly around last week's open, and right, which is right around the gap low at 3343.7. That being the worst case scenario where we drop down and hold around that range. And you'll see when I show you dollar why I'm thinking that. And then if we do take that out and hold right there, previous week high will be target for the rest of the week. That's what I'll be looking at, the previous week high as a target. And the previous week high was 3381.6, 3381.6. And then if we trade outside of the previous week high, there's another gap to the downside that we may be looking to trade into, which was from Monday, June 23rd, where the opening, which is the high, the high of that is 3395.0. The midpoint is 3389.7. And then the low is from Tuesday, June the 24th. And that low is 3384.4. So that we could target anywhere inside of that range if we get above last week's high. Let's go to dollar. Dollar Dollar also, like I said, dollar was pushing up the whole week, and we traded through a gap that was from the Wednesday, the 25th of June. That gap was the gap high, which is was made on that 25th. It's 97.709. The midpoint is 97.628. And then the low was made on Thursday, to June 26th. The low is 97.547. So we traded through it, and it looks like we're actually going to hold this as support and push up higher to higher. And there's another gap that we are likely to trade to. This gap was a gap that was made on Monday, June 23rd. The high was 98.347. The midpoint is 98.252. And then the low was made on Tuesday, June 24th, 98.158. I think that's where we're gonna go ahead and target. That'll put us above previous days, though a couple previous days highest liquidity. Our previous week high, which is also, that'll definitely be a target. Our previous week high is 97.964. So if we can get up above this, I'll see that we can I'll be looking for us to trade above the high. And then if we trade above the high and go ahead and trade into the gap, that lines up with gold selling off and going down into our level like I want to see us do. And then once we get down to that level on gold, what I'm hoping is we time that level with gold with us reaching into this gap and then rejecting to have dollar come, at the same time gold's pushing down to last week's opening area. We are pushing up into this gap on dollar. And when we reject off dollar and sell off, come back into Friday's candle. At the same time, gold, let me put it side by side so we can see even better. So what I'm looking at, right? And this is the lower time frame. This is what I want to see overall. So at the same time we're pushing up here, I want to see this move on gold. We're pushing down. And then once we get into this range on dollar, I want to see us down here near this area where we could see us trade into this 1 hour fair value gap slash 1 hour order block, or this 4 hour fair value gap on gold, and then hold to push up while we sell off on dollar. So that'll be what I'm looking for on gold and on dollar. Let's go ahead and go to YM. There's a couple of scenarios. We'll start with the daily. Let me take everything off first so we can see it a little better. If we just buy up for some reason on YM, Dow Jones, the first thing is we'll use this candle as a order block, and then we'll buy up, and the goal will obviously be to take out this high. If we don't, we either hold inside of this area that we are, or we come down into this gap right here slash fair value gap that we have right here. And then we can see maybe, some continued selling, or we see a rejection to the upside. Right now, I'm thinking we just come down, reject, and push up, right? So this lines up with the 4 hour, we inside of this, we traded out of this fair value gap right here, and we rejected near the high of it and started to sell off, right? So we got equal lows here. We have a swing low here, a swing low here, and then we have you'll see on this is where our gap is right here. So let me throw the drawings back on. This is where our gap is right here. So from this high, I'm seeing that, we push down, take out these lows, and if once we get down there, we should see like if we're gonna go ahead and go down into this gap, and then I'll want to see us push up from there. This is that situation is if we trade back into this 4 hour fair value gap, this could be one that gets inverted because we've actually tapped it to invert it, but we haven't traded back into it to try to use it as a support. But overall, this is what I'll be looking for. So um, on Dow, on YM, right? Um, I'll have to wait to see which projections we reach first in order to determine what direction I want to kind of trade on this. But we are still taking out daily highs. We took out our first daily low right here, and we took out another one right here, here, and we set the lows here. So we are still technically bullish on the daily chart, on the weekly chart, monthly chart, 4 hour charts. We are bearish somewhat, but we're inside of a range. So it's kind of sideways for now. That is in line with our COT report, as we mentioned earlier, that is giving us a range bound market right now. Similar approach on ES, S&P 500. Um, the daily looks similar. Let's take all of this stuff off. The daily looks similar. We did take out a couple of previous day lows on Monday and on Friday. We took out a previous day low, but simply just came back into some areas of imbalance and liquidity and just held those. Once we took those lows, we traded right back up into the range. So if we do, decide to sell off, we have the weekly opening from the previous week, which is inside of a small daily fair value gap that's kind of held us up. If we decide to take that out, we have the monthly, and then we have a gap and a fair value gap from Monday, June 30th that we will likely trade it to. And we can show you what that looks like. So we have a buildup of liquidity right above a fair value gap. That's one way that I like to see things happen and play out. But our three scenarios for me, again, if we trade above this 4 hour fair value gap to the downside, and just for some reason we just start to push up, which you never know, we could do that. This will be the area we could look to use as support to go ahead and take out and make a new all-time high. But overall, if we start to sell off and we start to take lows, there's a 4 hour fair value gap that I want to see us trade into, and how we respond to that would kind of determine whether or not this downside move is projected. But overall, from our previous high of the week, which set our all-time high, I'm looking for us to go ahead and sweep this range of liquidity that it's just trend line liquidity, which starts from Friday, 11th of July and extends down to Monday, June 30th, where the low that was made on June 30th is 6224.00. We have a couple, several trend line touches. The next major touch was on Monday, the 7th of July, with a low of 6246.25. And then we had our low on Friday where we touched 6276.50. So that kind of sets up the main lows of this trend line liquidity. And what I'll be looking at is to see if we come outside of this range we've been in, sweep those ranges of liquidity, and trade into the fair value gap from the daily, which the high of that daily fair value gap is 6223.00. The midpoint of that daily fair value gap is 6209.00. And then the low of that fair value gap is 6195.00. And if we get into this range, then we could actually see, hey, are we ready to buy up from here, or are we going to just kind of, just extend our range, because that's what we could be seeing, right? So that is ES. In Q, pretty much the same situation. Let's go to the daily. In Q on Monday, we took some previous lows out, but we held the monthly pretty much. We also took out previous day lows on Friday. We took out Thursday's low and we took out Wednesday's low, but we pretty much traded right back inside of the range after that. So that's why I'm like, hey, even though we are selling off, we could still see bounces back. There's a fair value gap and a gap um, on the daily. Um, that we could be seeing price trading to. And it overlapped by a 4 hour fair value gap that's pretty large. And then we have this this daily fair value gap that we could also see. I'm not sure if we come all the way down. I don't know what the catalyst will be other than CPI and maybe some tariff news, but I mean, we could see that drop down there. But for now, I want to see where we respond in this 4 hour fair value gap and then this daily one that we've already used. Let's go to the 4 hour so you can kind of see why I say that. Right, we got trend line liquidity, and I'm not drawing it, but the low that stands out to me is 22,584.75, and then our low we made on Friday, that low was 22,830.75. Those are primary lows. We have the lows that are inside of that. If we take out those two lows, if we take out the first low that I mentioned, the first low that we'll need to pay attention to is 22,830.75. And then we also have a low at 22,780.25. Those are the first two lows that I'll need to pay attention to because that gives us this couple of moves that we have, right? In this case, there's two downside moves I could see us making. We trade from the high, our last high, into this 4 hour fair value gap or this daily fair value gap and hold there. That first daily fair value gap is at 22,750.75. That's the high of that daily fair value gap. The midpoint of the daily, that same daily fair value gap is 22,721.2.75. So I'll repeat that. The midpoint is 22,721.75. The low of that fair value gap is 22,692.75. That's the first stop point that I could see us making. This range. There's a 4 hour fair value gap that overlaps that, and that may give us, support to stay within that the range we're currently in. If we want to extend and expand that range, there's a lower fair value gap on the daily that we could trade into. And then if we trade into that, that's when that 22,584.75 low will be at risk because we could be seeing that price sweeps that low and then we bounce off of the daily fair value gap that this one is set in. And that particular fair value gap is at 22,599.25. That's the high. The midpoint is 22,573.75. The low is 22,408.25. And then once we get into that, we can see a bounce from there. And then, maybe that's the sign of either a continued range trade and we just kind of expand the range, or we stay in our current range. So that's why I got the two setups to the downside where we can see bounces off of either one of those daily fair value gaps. And then the last setup is, again, if we just push up immediately, we use the last candle on the 4 hour as our order block, and then we go ahead and automatically take out the high. So that's kind of like where I'm seeing the all of the pairs that I look at for the week. I'm going to be trying to look for setups on for sure on Monday. I don't know if I'm gonna go in the office on Tuesday and Wednesday, but I'm planning on not going in the office on those 2 days so I can trade on those 2 days. But if I can or can't trade on Tuesday and Wednesday, Thursday will be another day, and then Friday should be another day that I can get to trade. So and then Thursday and Friday are both news days, but Thursday is a big news day. But our biggest news days are Tuesday and Wednesday. So if I don't get to trade on uh, Tuesday and Wednesday, I should at least know a direction that I can trade for on Thursday and Friday. But to be honest, Thursday and after PPI, CPI news, it's kind of been a hit or miss because there's still some indecision on which response we react to. the CPI news or PPI news. And then there's been a case where no reaction at all. And then the trade responds to CPI or PPI on Friday. So I'll just have to take a look at that. So that's pretty much all I got for the week. I did finish the week up green on all of my funded accounts. Um, nice week in the 300K accounts, especially. Um, after being flat for most of the week, I finished Friday up to to make to take away the small scratches and then some. So great week on trading last week. And then that's it. Stay patient, stay disciplined.